Okay, welcome back to another episode of Banking Without Borders. Today we're going to look at the best savings accounts in the UK for April 2026. And the big story this month is definitely ISAs because we are right up against the tax year deadline. And that deadline is a big reason why the cash ISA market is so competitive right now. We've got rates as high as 4.81%. Most of them are sitting around the 4.5 range. Some are bonus led, some are more straightforward, and some are just a bit confusing. So we're going to go through the details, keep it jargon free and try to make sense of everything. Outside of ISAs, things are just as competitive. We've got regular savers as high as 7.5%. Fixed accounts are looking really strong and some interesting easy access as well. In terms of the base rate, it's currently 3.75% and the Bank of England isn't set to meet again till the 30th of April. So the rates we discuss in this episode, at least for now, are more or less likely to remain the same. All the rates today are up to date as of the 1st of April 2026. And if you do want to check the latest, most up-to-date rates, then check out depositscout.com where Jan and I update the table every single day. So Jan, I think we should start with cash ISAs, right?
Yeah, you're absolutely right. Looking at these rates, I get jealous personally. So we got eToro with a cash ISA of 4.81%. There's one thing to keep in mind if you consider opening up that account. The money is held in money market funds, which are FSCS protected, but you only get £85,000 of deposit protection instead of the normal £120,000. Then the trading 212 cash ISA with 4.58%, which is also pretty attractive. Plum has a cash ISA of 4.57%. Something to keep in mind with that account is that a big chunk of the rate is paid after a year. And if you decide to move part of your money elsewhere in between, you might lose that bonus rate. And that could be a big disadvantage. And we also got some interesting high street banks.
Yeah, I mean, these are really impressive rates. For those that are looking for a big name or brand recognition, HSBC are offering 4.5% right now and £150 of cashback as well when you move up to £20,000 into the account. And Nationwide as well, offering 4.35% on a 1-year fixed ISA. If you are willing to look a bit longer term with Nationwide as well, I think up to 5 years, they're offering 4.5%. Money Farm have a 4.33%. You do need to keep £500 in that and stay within 3 withdrawals. Tembo have an easy access cash ISA at 4.3%. Although with Tembo, withdrawals can take up to 2 days to process. Moneybox have 4.27%. And you have again up to 3 withdrawals before impacting the rate. Jan, which is your pick from this list?
Good question. I probably have 2. If I was looking for a variable account, I would take the eToro Cash ISA, despite it only having a deposit protection of £85,000. In my opinion, that's not a disadvantage for most people. If I was looking for a fixed account to deposit money over several years, probably HSBC fixed rate.
Yeah, me too.
Or the Nationwide offering. Those are pretty good in general.
If you do want to check out any of these accounts in more detail, they're all available on depositscout.com. On there, you can filter by account type, compare the details, and we've also got a dedicated ISA page where you can work out how much interest you could earn and even take a quiz to figure out which ISA might suit you best. You can also sign up for email alerts, so if a new top rate appears or something changes, you'll be notified. And one feature we've launched recently is the rate history graph on savings accounts. That lets you see how a rate has moved over time for a specific product, which hopefully will give you a better sense of whether an account has been fairly stable and whether a provider has a habit of cutting rates quickly or not. So if you want to explore the tables for yourself, that's all at depositscout.com. And if you do check it out, please feel free to share any feedback in the comments. The easy access landscape is really quite competitive at the moment as well. Tembo still have 4.75% available. Chase UK continue to be on the table at 4.5% for new users, and that has a minimum of £1 and up to £3 million, which is, yeah, that's fantastic. LHV Bank are offering 4.25%. Again, the Virgin Money double take eSaver. I don't really like this account, Jan. It's not really easy access, is it? You can only withdraw twice per calendar year. It is 4.16%. And if you can stomach 2 withdrawals a year, then that could be interesting for you. And Sidekick up to 4.17%, including a 0.6% bonus for 12 months up to 60k with unlimited next day withdrawals. So there's a couple of easy access accounts in there. Jan, which is your favorite?
I prefer the Tembo Home Saver. It's very, very clear. And one thing you didn't mention, Johnny,
please.
If you're actually using Tembo to get a mortgage, then that rate increases by 1% to 5.75%, which is, wow, it's exceptionally good, really. But even if you don't decide to use that, 4.75% is extraordinary.
Yeah.
Sidekick sounds like a wrestling move. What an interesting name for a bank. Yeah. What's that? Really?
Well, it's not a bank. Your money is deposited with Griffin Bank. Not to be mistaken for Gryffindor, Those two aren't
That's what I thought.
the same. So we have notice accounts next, which I don't even think are worth talking about, but here we are. We've got two. I say these probably aren't worth talking about, Jan, because as soon as you talk about fixed accounts, you're going to think, well, what's the point of these notice accounts? But let's do them really quickly. 4.26% from Stafford Building Society, 180 days notice, and Oak North, always on the notice account table. They're a popular one at 4.15% for 90 days, which, 90 days is obviously much more practical than Stafford's 180 days. And that minimum deposit is only £1, whereas Stafford are asking for £5,000. Someone has written here in the document that I'm currently looking at, the conclusion of these accounts is they suck. I'm assuming, Jan, you wrote that.
Absolutely, John. Let's move to the fixed accounts. Much more compelling. I wouldn't even bother spending more time discussing notice accounts.
Okay.
It's what it is. Fixed accounts up to 4.6% of interest rates with the Market Harbor or Building Society. If you commit to hold your money for over 5 years, it's a bond you're essentially buying in, and that bond matures on the 31st of July in 2031. So it's a little more than for 5 years actually. If you're fine with that horizon, that's all right. Close Brothers, 4.56%, 5 years horizon. Chetwood Bank, 4.55%.
Yes, but quickly, Jan, on Close Brothers, the interest is being paid away each year.
No compounding interest. Big disadvantage. That makes a huge difference. If you look at the whole period of 5 years, that can make a big difference, depending on how much you deposit, obviously. But if your interest is not earning interest, that's typically a big disadvantage. Unless you take it and invest it elsewhere. Gotta do that. You need to be disciplined enough to do that. Mm-hmm. Then we got the Chetwood Bank, 4.55% if you commit for 5 years. There's no maximum deposit. Kent Reliance, 4.51% for 2 years. MBNA, which is Lloyd's part of the Lloyd's group, I believe.
This is solid. Another, well, not necessarily high street, but backed by a high street bank. A pretty straightforward account to open online, except interestingly, Jan, you have to manage it by phone only.
By phone?
Yeah.
What? How's that supposed to work? You're phoning them whenever you want to take out money? I mean, Johnny, I expected a lot, but I didn't expect to say that.
Wait. I'm just confirming. I've got to wait. Don't.
Or through the app on your phone? Or do you have to phone them every time you want to make a withdrawal?
Yeah, literally, Jan, on the website, it says manage this account by phone.
I can't believe it. I didn't know that existed in 2026, but great. You want to move on to the regular savers, Johnny?
Yes, let's do it. We've got some really interesting regular savers.
Please pronounce that first name because I can't.
Monmouthshire Building Society. Mm-hmm. That is the top of the table. And you'll notice that we haven't listed this table in order of the best possible rate, which would actually put Principality Building Society at the top, because we've set this up in a way that we would say is the best account for earning the total amount of interest that you can earn. That's Monmouthshire Building Society at 6%. That's because they have the largest monthly cap of £500 and a long term of 12 months available. So Monmouthshire Building Society at 6%. Lloyd's Monthly Saver at 6.25%. First Direct, again, you have to have the first account to get that account or get that regular saver, but that's 7%. Cooperative, 7%. Nationwide at 6.5%. Both of those two as well require current accounts, and so does Zopa at 7.1%. I think from this list, Jan, the Lloyd's Club monthly saver stands out. Probably the best all-round regular saver here. It gives you a strong fixed rate, 6.25%. That's really good, and a good monthly cap of £400 across 12 months. With that, you get access to those Club Lloyd's benefits. The yearly lifestyle perk, you get fee-free debit card spending abroad, the £5 monthly fee that you have to pay for access to that, and that regular saver is refunded if you deposit £2,000.
Yeah, that shows again how important it is to look at the overall picture and not just get impressed by these interest rates, which can be extraordinary, 7.5% nowadays. Wow. But then if you look at the fact that you can only deposit £200 per month, it's insignificant. And therefore, looking at the overall picture, Lloyd stands out, and Monmouthshire, they also stand out. Pretty good accounts, general. And would I switch my bank in order to sign up with these banks and take advantage of these accounts? Probably only if I have anything else to do with that bank. You deposit the maximum amount every single month. With our top option, Monmouthshire Building Society, you only get roughly £200 of interest at the end of the year. Is that worth the hassle? I don't know. But if you're already banking with one of these, take advantage of that regular saver. favor. I mean, why not? It's a good way to maximize your, the interest you're receiving, and good substitution to a easy access account or fixed account that you might have.
Let us know in the comments, where are you currently saving your money? You don't need to give us your online banking password, but we'd love to know what accounts you're using. It'd be really interesting to hear from you, and also what you think of some of the accounts we've mentioned today. Which cash ISA would you take out if you're on the market looking for one? Does eToro look appealing, or is it more of a HSBC vibe that you're looking for? Let us know in the comments, and thanks again for watching or listening, and we'll see you in the next video or episode.